Hi there. So I just want to talk about how we do cash flow forecasts for clients. So we use this software that creates a cash flow predicted balance for every month for the next 3 years. And the way it does that, first of all, it synchronizes on a daily basis to your existing accounting software, which could be Xero, QuickBooks Online, or Sage Cloud. So if you've got one of those three types of software, which most people do, that's fantastic. So this updates daily with actual data, so it becomes more and more accurate as the days go on. And then what it does is every line in your chart of accounts, every nominal ledger code you have, will have a separate, will automatically create a separate line here. And then here you see going back, so this is all the actual data, so these will all agree to your accounting records. And then what we do is we create a prediction. So obviously it's a lot to create a prediction for 36 months for every line in your nominal ledger. So initially this will be done using AI or using previous months data in your accounting records. And then once we've got that as a sort of first draft, then we obviously go in and correct it, and we use it'll be a sort of dialogue between us where we use what you expect will happen, what you want to happen. We can put all that into the forecast, and we can also create different scenarios. And we can also have one like more aspirational, this is what we want to achieve, and then we could have, and then we could track the actual data against that. And just having that as a sort of yardstick helps you view your actual data in a whole different light and can really help motivate you. And it works. This is why every large company does this sort of budget, exactly why. So it's to hold people to account and to just get a much better idea what's going on. And by going through this process, it does help you become more profitable and grow more just by having that yardstick. And it's similar in a way to losing weight and sort of having some aspiration how much you want to lose weight, and then sort of weighing yourself and every week or something and tracking it against that. It's sort of the same principle. It does work, and it's extremely important. That's why every business, no matter how big or small, should definitely have a cash flow forecast. And two different types, one that updates all the time, so just gives you a prediction, what it thinks your balance will be in 3 months, 6 months, a year, 2 years from now. So you can see if there's going to be a big problem in the future, then you can work around the best strategy of fixing that. And companies that don't do this will end up in a lot of cash flow problems. So there's cash flow forecast, and then there's the budget, which is something that's sort of set in stone once you do, okay, this is our budget for next year. And then there's three aspects. So here you see we have cash flow statement, the cash element, then we have probably the most important, and we also have the profit. So same thing every month in the next 3 years. There's we can see the P&L account and also balance sheet. And by getting these, and they all sort of work together. So we have to look at them all together. And by getting the detail right, the P&L right, and the balance sheet right, then the cash flow statement is the sort of logical consequence of that. So if you're interested in exploring this, why don't you hop on a call with me? I can go through it with you and possibly even sort of plug your own data into this, so I can show you what a cash flow forecast would be like with your exact data. That's all for now. See you in the next video.